What's up, everybody? It is Tuesday, March 17th, St. Patrick's Day. We are looking at the markets. Wanted to give another update. This is in the SLV Silver ETF. I had mapped out a buy entry up here around 14 and 1330. This was on Friday, so the market pulls into here on Friday, starts to show a little bit of support right here in this area where we exploded to create new highs. So I had this as a buying opportunity right here. And I was expecting on Monday, come Monday, the market might even gap higher. I was really excited about this entry, and but like I say, every entry you have to risk manage. You can't go all in. You have to make sure that you have an exit strategy just in case you're wrong. And we were wrong in this case. The market opened up on Monday, smashing through the lows here, creating even lower lows down here around 1150. And so now this makes us reevaluate this market. So we can get rid of this line here, get rid of this line here, and now it's like, okay, where's it gonna stop? So we have this red line coming across the bottom. It should actually be green because it is a buy zone line, and we see some support. So yesterday the market opened up all the way down here around 1150, but it ended up rallying throughout the day, and it covered about a full dollar before the day ended. So yes, it gapped down to start the Monday, but Monday actually proved a green candle here, a full nice green candle. So let's talk about where the buying opportunities are now on this chart. If we're looking to buy silver long term and we're looking for some good entry points, like where do we buy? How low does it go? And looking at this chart, this is a daily chart going back to 2016 February. And there is no support anywhere to be found on this chart. Even if I scroll back like that, going back to 2015 and beyond, still no support. But this green line is showing support from way back. So let's go even further back. We'll go weekly chart, still no support. So we got to go to a weekly chart, go to time frame, and go back even further. Let's go 20 years, and then let's take a look back. So here we go. Now we got a nice full 20-year chart. And this is the area way back here. This is in 2008 October. So I remember this. I was actually trading this market at this time, and I did catch this run all the way up to 50. And it was a pretty crazy time. At the time, I was working for a brokerage firm in Irvine, and I had all my clients in gold and silver. And silver went from $8 to $50 an ounce. That was a wild, fun ride. Unfortunately, the pullback, I identified a few levels of support. This was one of them here. We did get a bounce off of here, but then we cracked a new low, and then we cracked an even lower low. So at this point, this is a new bear market. My next entry point is down here, around 1850. The market comes into the 1850 zone, bounces, 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 and then cracks a new low. But since then, since around 2014, silver's really been in this sideways range. It's one of the most frustrating things ever because I was really bullish silver. But from 2014, 15, 16, 17, 18, and 19, silver didn't go anywhere. It literally traded sideways. Um, so we're looking at what's happening today. We broke even a lower low beyond these lows here. We had a kind of a floor in place, and that's where my previous buying opportunity was this last week on Friday. However, we dipped even lower. We are now into this range where silver was at $8 and exploded to 50. This is the prime time buying range right here. We want to buy here just because we don't want to miss a nice little rally. We want to buy here because we don't want to miss the nice rally. But if we're wrong here and here, this is really the area that you want to be putting a little bit more risk on the table here. So the market's hasn't quite dipped its toe into this area. I mean, we're sitting right here on the edge. So I wouldn't be surprised to see this market dip a little bit lower into this zone before taking off. However, I'm going to zoom in on a much shorter time frame so we can see what's going on today and within a shorter time frame. So we zoom in on this chart. Let me go even further. Let me go on like a 5-minute chart. Okay, so we're on a 5-minute chart here. And this is what the market's doing. So yesterday we had a flat day. Volatility was really low. Today we opened a little bit lower. We had a nice rally, which actually broke these highs here. I mean, they're 1-minute highs, so it's nothing to write home about, but that's showing us some sort of buying pressure that's creeping in over here. We do have, volume fell off a cliff on this 1-minute chart. And so we broke a new high. We're pulling back into this area. We did break a new low here. So, like I said, I wouldn't be surprised to see silver dip even lower before it decides to take off. But either way, because of the fact that this market has gone sideways for 2 days after having such a volatile week prior, it's a great time to buy options. It's a great time to buy a call option above the market. The options are cheap because the market slowed down. Volatility is less. Therefore, you're paying less in volatility price on your option. The market has had a steep decline. That's another great reason to buy a call option right now because the algorithm of options is basically looking at this falling market and calculating the odds that the market will continue to fall further. Therefore, the put options in this market are going to be more expensive than the call options in this market, which is a great thing for the style of trading that we do, which is we wait for a nice pullback into a good zone and then buy our option. We're able to buy the option for a lot cheaper, and especially a day like this where we have sideways action, volatility is super low, and therefore we're not overpaying for volatility on our option as well. So that's that. This is the silver market, SLV ETF. We will keep an eye on this market heading forward. And I do expect this market to rally significantly here very soon. The Fed just announced a whole another quantitative easing program that they feel is going to save the markets. But they've been doing quantitative easing for like 6 to 8 years now, and it hasn't saved the markets. Let's be real. It's put us into a much tougher situation. So that's it. Let me know if you guys have any questions. I'll go ahead and take a look at any other charts you guys might be interested in. And I will be doing webinars weekly if you guys want to tap into those. And reach out to me anytime. I'm here to help. I'm here to answer any questions and to talk strategy because, like I said, in times like this, we all need to be more nimble and have multiple sources of income that we can kind of rely on. So hopefully this helps, guys, and we'll talk to you guys soon. Thank you.